Alrighty, so today we're going to be breaking down some setups on ES, some really clean setups this morning. So first things first, I'm going to navigate over to my free Discord chat room. If you want to join that chat, there'll be a link in the video description. All right, so right here, so you can see this was the very first thing that I posted this morning in chat at 8 o'clock a.m. Eastern time. I said equal highs coming up, just took previous day's low liquidity, possible little scalp here. Okay, so now we're going to explain the significance of what I was saying right here. All right, so ES clearly, as we can see over the past few days, it's just been getting destroyed, been getting beat up pretty bad, right? So, and lower time frame market structure in this thing is clearly bearish, 100% bearish, okay? Now, what happened this morning? Well, London session was bearish as well, so you can see right here was where we opened up at this morning. We had a little move up right here, took that liquidity, and then came lower, okay? A little pullback up into a premium within that price range, sold off lower. And on this sell off lower right here, what key liquidity pool did we take? Well, we took this low right here. See this? I'm just going to note it for you real quick. What key liquidity pool is that? That is previous day's lows. That is a key liquidity pool, okay? So we took out previous day's lows. What does that mean? Well, that means price is in a discount marketplace. It's bearish. Lower time frame market structure is bearish. Don't forget. But something can be bearish and still be in a discount. So it took out this low. It was in a discount, okay? And then we got this price range right here. So what I'm going to do real quick is I'm going to take the high to the low for you, okay? So we're going to take our Fibonacci from this high right here, because this was the high prior to that leg lower, okay? So this is a 15-minute price range, okay? So we're going to measure that price range, and we're going to find 50% equilibrium of that price range. Because why? Why are we doing this? Well, because anything below that is a discount, anything above it is a premium. That's why we're doing it. Okay, now I'm just going to make this green so we know it's our equilibrium price point. So remember, green, this is our equilibrium price point of that price range. Okay, so far what have we concluded? Well, we took out this key liquidity pool. Lower time frame market structure is bearish, but we entered a discount marketplace. And then what happened after taking that liquidity pool? We had a nice little pop off that level because we took out that liquidity. We had a move higher, a reaction from that. Okay, so see right here how we had that 15-minute swing point put in. We had that 15-minute swing point put in, and then we had a pullback. Okay, so this is key. There was something that was created on this 15-minute swing point right here, and this is when we're going to go down to our lower time frame. So on our 5-minute chart, you will notice here, one second, right here. See this? What is that? Look what I just noted. See that? That is what we call equal highs. Okay, what do we know about equal highs? Well, very clean levels like that, very clean levels like these equal highs, they usually don't get left like that for long. It doesn't take price long because it's going to want to sweep that level. It's too clean. It's not going to get left like that. I saw that. All right, and remember, now we're on a 5-minute chart, and this is our equilibrium price point. See this? So that we had this push up right here. We had this push up right here where that 15-minute swing point was created, and then price pulled back right here. Pulled back. So now this is key. I really want you to think about what I'm about to tell you, okay? So 15-minute market structure is bearish. We've already concluded that, right? It's overall the 15-minute market structure is bearish, but it entered a discount after we took out this low. Okay, and this is that 50% equilibrium of that price range. Remember, now 5-minute chart actually had a shift in market structure to the upside after taking out that key liquidity pool. See this right here? What is this? That is a swing high level. See how we broke that swing high level right there? We broke that swing high level, and then what happened? Do we want to just buy up here? Do we want to buy when it's tripping up? No, why? Because it's in a premium. We want it to pull back into a discount. What does price do? It pulls back into a discount right here. Now note this. It pulled back into a discount, but it's in a discount on the 5-minute chart, but it's also in a discount on the 15-minute chart. Remember, this is 50% equilibrium. The 15-minute price range that I noted for you, this is equilibrium of that price range. It pulled back into a discount of that price range. It pulled back in a discount within that 5-minute price range, right? So even though the market structure is bearish on the 15-minute, it's bullish on the, or we just had a bullish shift on the 5-minute chart. I want you to think about my series on market structure. Remember, what did I teach you in that series? Well, When do we have 100% confirmed bullish market structure? Well, it starts right here. We have to break a swing high level first. That's your shift, but that's just step number one. It's not really confirmed yet, right? We need something else to happen after we get that shift in market structure. We want to see it pull back into a discount below 50% equilibrium, and then we want to see a swing low put in. Then it's confirmed. It's 100% confirmed at that point. Look right here. There is your lowest low with two higher lows on the left and the right. That is a confirmed swing low level. And now we have lower time frame market structure 100% confirmed bullish in a discount marketplace. Okay, so I want you to really think about that, really put it all together, what I just laid out for you. So let's go over it one more time because I really want to make sure it sticks, because this is just a beautiful, beautiful, beautiful market structure lesson, okay, on how to utilize different time frames, how to utilize different discount and premium marketplaces. It's just a awesome lesson. So see how I took out this low right here? That was our key liquidity pool. We took that out of the marketplace. Now, market structure, remember, it's bearish. It is bearish, okay? So you're counter trend trading that 15-minute. But we are knowledgeable of our discount or our equilibrium price point. So this is that 50 on the 15-minute chart. There is this is 50% equilibrium. That is 50% equilibrium of that price range. See that? In the 5-minute chart, we had a shift in market structure. Shift, pulled back to a discount, put in a swing low level, 100% confirmed at that point on your lower time frame. That's key. It's in a discount on the 15-minute, it's in a discount on the 5-minute, and your lower time frame 5-minute in this case is 100% confirmed. And we have a clear as day draw on liquidity, because if you're scalping these smaller time frame charts, your profit target, you want it to be, so you want to look at the next key liquidity pool in a premium marketplace. Because remember, what does premium mean? Premium means expensive. You want to sell when it's expensive. And your job is to look in that premium marketplace where that next key liquidity pool is. Where's that next key liquidity pool that is clear as day? Right here, those really clean highs right there. We want to take out those buy stops in a premium marketplace. It's in a 5-minute premium. It's in a 15-minute premium. Okay, you didn't want to be aggressive holding past that, because remember why? We're fighting that 15-minute market structure. We weren't looking for no home run trade on this. We're looking for a scalp play, and it gave it to you. Very clean scalp play right there. Okay, because it pulled back into a 15-minute discount, a 5-minute discount. Market structure on the 5-minute is 100% confirmed bullish. Comes up, takes out those equal highs. That's your trade. Right there, that clean. Again, just a picture perfect market structure lesson displayed right there on how to utilize premium, discount, all that good stuff. Okay? You want to always be aware, am I in a discount on this time frame, or am I in a premium? And then utilize your lower time frame. Am I in a discount on this time frame, or is it 100% confirmed market structure on this lower time frame? You need to ask yourself all these questions. And once you start to analyze all this different stuff, you start putting these puzzles together. You start putting these pieces together, and it just becomes so clean, right? So now let's go to the next setup, because again, remember, I wasn't looking for this thing to just rip up to the upside. I thought this thing was going to sell off. So let's scroll a little bit. Now I noted this as well. See right here, I said also ES coming up on some daily support here. So that key market structure shift to the upside, it could happen very soon, and it's probably gonna be around this area off these higher time frame levels. That was another reason I wasn't convinced that was the bottom there, because we had these higher time frame levels. Like it wasn't really sitting at that time this morning. It really wasn't sitting on any key level of support, major support. It was taking out this liquidity right here, but like nothing major. Now we're coming up into some key levels here that we could have something cooking here pretty soon to the upside, where we might catch a nice bounce play here pretty soon. Because we're coming down to this higher time frame level of support, we sweep that liquidity, we're tapping into this imbalance. That was another key part of the day, because we had this lower imbalance that I knew price was going to want to draw into. See right here, we have that bullish fair value gap. That is a liquidity pool. See that? That was serving as a draw on liquidity. Price drew down into it. Okay, so I noted that on the daily chart. Now let's see what else. Let's go to the next thing that I said this morning on it. I said there it is, but now would be very careful with long since overall lower time frame still bearish, which we've already talked about. Okay. Let's see. I said this isn't a very strong bounce. Likely from what I see right now, we'll want to pull the rug soon. Trade down into those daily levels I posted earlier. After it does, I would keep a close eye on that shift because yeah, this bounce right here, it was kind of a like sure that lower time frame 5-minute, pretty strong bounce right there, but in the grand, like if you were to go to like a 15-minute chart, it was a pretty weak bounce. It wasn't a very there wasn't a lot of conviction on that bounce. I didn't see it holding. Okay, I saw it as simply just a stop run. That's all it was a run on stops. And that was that scalp play that it offered you. It was that stop run. Okay, now let's go to the next one. Right here, I said at 9:08 a.m. Eastern time, ES having trouble moving higher here. Let's see them lows get tagged next. That's what I'm referring to. So you can see it was just kind of battling right here. It was also had VWAP persistence in there as well. Took out those highs. It was just having a tough time. And so kind of that trader intuition. It didn't have that displacement yet, but it was kind of like that, you know, that trader intuition that you do develop with time. That it was telling me this thing's about to die. It's about done. And let's see right there. That's where we got the displacement. So like I always tell you guys, let price show its hand. This is just as price showing its hand, clear as day. I mean, look at that huge flush off of that level after taking those buy stops off of VWAP as well. I mean, that's a huge displacement, huge crack. And then I said displacement made, price starting to show its hand. It's starting to show you that, hey, it's weak. It's about to go down and tag these lows and trade down into that higher time frame imbalance, test those higher time frame levels. So you can see that's what I said, and that was the aftermath right there. So see that? It popped up, came down, attacked those lows, right? So now let's go into my own charts and let's look at it. So let's go to a 1 minute chart here. So that's where we were first looking at it. All right, so right here was that displacement this morning, right there. So we came up, took up equal highs, and then boom, big displacement to the downside. There is your fair value gap confirmation. Now, do we want to be shorting on this while it's selling off hard like this? Do we want to be doing that? No, we don't want to do that. Why? Because it's in a discount marketplace. We don't want to be doing that. We don't want to be shorting in the discount. We want to be shorting in a premium. Where is a premium marketplace? Where's a premium? It's above 50% equilibrium. See that? Right there is 50% equilibrium. As soon as we traded above 50% equilibrium, that price range, we entered a premium marketplace. Okay? And inside of a premium marketplace, identify that key level of resistance. Where's that key level of resistance? Well, you actually have it right here. This is your bearish order block. See this? That is your bearish order block in a premium marketplace. Above 50% equilibrium of that price range, you have this bearish order block. This is all one bearish order block. Right there, comes up, tags it, and that was the end of it. It came down, and what did it do? It tagged those sell stops, or it tagged these sell stops. That's at a higher time frame level. So it tagged low of day. That's that sell side liquidity pull. Came down. And where did it find support at? Off of that higher time frame level. That was that super nice bounce occurred off of that first higher time frame level that I noted. This bounce right here. Okay? And that ain't random. I mean, that's not random. I mean, look how clean that is. After testing that level, boom, comes up, tags these buy stops right here this time around. You know, kind of the same scenario, displacement. As a displacement, shift in market structure, and then starts trading lower. Why is it trading lower? Well, because we have this imbalance right here on the daily that we've already noted. That's that daily imbalance. That's a daily higher time frame level, the next one in line. And then it comes down, sweeps the sell side liquidity, and then it comes down into that imbalance, tests that higher time frame level, and now we're starting to make our way up. So I mean, just really clean price action on this thing. Really clean price action this morning on it. So right now, what's my stance on it? Well, it's still overall bearish. Okay, we haven't really, cause I mean, it's still operating within a bearish market structure. It's testing some really nice support right now, and we traded down to that imbalance. But overall, it's bearish. Okay, and to kind of do the same thing, we could possibly get a buy play here. We have this bearish order block right here. See this? Look at my cursor. That's a bearish order block in a premium marketplace. So we got some resistance right there that it could fight at. But a possible setup right here for a buy. Now up here, you don't want to be buying. It's because it's expensive. Remember, I want you to remember our talks that we did just a second ago on when we were going over that first play. Take your high. Let's measure this 1 hour price range. Take your high to the low. Find 50% equilibrium of that price range. We're gonna do the same thing. Okay, where's 50%? 50% right there. We're gonna mark it green, right? Okay, see that? That's 50%, 50% equilibrium of that price range. Okay, so right now we are in a premium market, or we are in a discount marketplace. Market structure is bearish, but we are in a. Let me remove these other lines. It's getting kind of noisy in there, so let me remove that one. Remove that one. And let's just remove this one too. All right. So this is 50% equilibrium. So right now we are in a discount on the 1 hour chart. It's bearish. Market structure is bearish on this time frame, but we are in a discount marketplace. We have this draw up here being this order block inside of the fair value gap. So it's likely going to want to come up and test this here pretty soon. Okay. Now remember what we were talking about. Let's go down to a lower time frame now. What about the 15-minute chart? Do we have anything here? Well, see this right here? What is that? That's a swing high level. See how we broke that swing high level? What is that? That's a shift in market structure. Now what do we want? We want a swing low level, or we want it to pull back into a discount preferably, which it hasn't done yet. So let's measure it. There's a discount, so that would be ideal to see it pull back into a discount within this price range and then put in a swing low level. At that point, it's 100% confirmed, and then you could start looking for some upside objectives. Look for it to trade up into a premium and test that level of interest in a premium. That is a possible play. I'm not telling you to play that. I'm just pointing it out to you. Again, just playing that market structure. Okay? That is how I mean, it's a setup, and it's likely that's a likely scenario if it can do so. If it can pull back, if it can pull back to a discount, and then you get your confirmed swing point, that's a very likely scenario in the future here, maybe overnight or something. But we'll see how it plays out. Again, this is trading. Anything can happen. So yeah, that's what I wanted to go over today. I mean, just a really clean market structure lesson. Really good examples in here. So if you enjoyed the video, make sure you leave a like, so you subscribe to the channel. I'll catch you later.